Welcome, everyone, and I hope you find this interesting. We're going to spend a little bit of time talking about automotive in general, but mostly we're going to be talking about autonomous. And I hope to actually not only give you a little bit of insights into it, but give you some real practical advice. As you see, the panel is fairly expertised, and I'm going to start by go ahead and let them introduce themselves. You want to start it on off?
Sure. So
no Michigan football.
No,
you promised.
You have two U of M grads up here, so yeah, we talk about Michigan football constantly. Marc Weiser, RPM Ventures, 200 million under management, and I am the old man when it comes to investing in the automotive industry. Been doing it for 17 years. I live partway between California and Detroit, actually between California and Detroit both, so I pay taxes in both places, unfortunately.
Hi, this is Vijay, Reddy, investment partner at Intel Capital. So Intel Capital is the venture capital arm of Intel Corporation. We invest between $350 to $500 million a year. I've been investing since 1991, over 1,500 companies and $12 billion to date. And autonomous driving is one of the core investment focus areas for us, and happy to talk to you.
Jeffrey Schox from Trucks Venture Capital. Along with my partner Kate, we both invested in Cruise and autonomy, but I'm probably better known for the patent law firm that I founded and still run. The firm kind of gives me a little bit of insight into trends, technology trends specifically. And so when my partner Riley approached Kate and I, we kind of saw this great opportunity to create a fund, a small one. It's a $20 million fund that's focused on autonomous vehicles.
All right. Well, thank you very much, gentlemen. So why don't I go ahead and get started with, so where do you invest in autonomous? Because it's a pretty broad category, and why do you choose that area? You want to start, Jeff?
Sure. So we kind of see this as two buckets. So one is kind of like feeding the autonomous agent. And so we need to have great sensors, and we've invested in two hardware companies, kind of the sensor side, Oryx and AI. And then we've invested in a few companies that are focused more on the software layer and kind of the processing side, and a couple on the data with ZenDrive and Nado. And then the other kind of segment that we invest in is kind of what we'll call constrained full stack. And so there's great companies out there like Cruise and Autonomy, but it's really, really hard to do that. And ultimately, they needed a partner to be able to get there. And what we see is that if you constrain the autonomous problem, in some ways, you can make it easier and you can build companies that go the entire distance. And so we've invested in an autonomous trucking company, Starsky, that's kind of whitelisting trucking routes. And another company, May Mobility, that's going to have a shuttle service, kind of using fiducials. And these companies are kind of almost cheating in a way because they don't have to be level 5 everywhere, but rather constraining the problem.
Okay, Vijay?
Yeah, I heard two questions in there. Why are we investing in what companies and what kind of investments we're making? I think one is, it's a pretty interesting time to be where you see the problem of population and urbanization and the existing road infrastructure not meeting demands. And then you see the pretty amazing coincidence of batteries, electrification, meeting autonomous, meeting ride-sharing, and that meeting connectivity as well. So it's a pretty interesting time, and it opens up, in our estimate, like a $7 trillion market in the next 30 years. And from an investment standpoint, we're investing across a stack. So we have a common investment in AI. We're investing in Peloton, which is an autonomous trucking company.
Mm-hmm.
So pretty much from sensors to data to mapping. So we have investments in all these different sectors.
Okay. And what do you think are some of the key things that make you choose to invest in those sectors?
I think as we look at the autonomous space, right, we look at we need to invest in shovels and spades. So we've invested in a few companies which
the picks and shovels of the gold rush.
Yeah, exactly. Yeah. So for example, Mighty AI is a company which does annotation of data. It's not sexy, but it's something which needs to be done to get the cars on the road.
Sort of like investing in blockchain. You're investing in the infrastructure bit.
That's right. And then we're also investing in mapping. So we did a pretty large acquisition recently of Mobileye. And with that comes...
Understatement of the week.
a pretty large investment in
in a company which does some computer vision stuff.
just a little bit.
Yeah. And so with that comes some capabilities with the vision capabilities, and then we need to augment that with mapping. And the other piece is we're looking at autonomous, all kinds of autonomous, right? So we're looking at ride sharing, we're looking at even on the different kinds of vehicles, eVTOLs, we're looking at the last mile delivery service, autonomous ships, anything which you can make things autonomous will become autonomous in the near future. So we're looking across all these different kinds of vehicles.
So much like the two of them, we have our own buckets for how we think about autonomy, and we think about autonomy as an enabling technology for mobility. Because the fact is that I would always challenge friends like this. Tell me what the business model is for autonomy. And the answer is today there is none. You can even ask folks at Waymo, what's the business model? And there is none yet. Because how many autonomous vehicles are actually on the road today? And it's a very small number. So we're a ways away with regards to putting large-scale fleets on the road, despite taco trucks, et cetera, with GM, who I know is in the room. We will get there eventually, and there's a lot of technology that has to be developed to get there. So that's one area we look at is what enabling technologies, or what technologies do we have to invest in to help get us to level 5? And the second part is then we look at as level 5 starts to approach, level 3, level 4, et cetera, what does it change in the rest of the mobility world? So we invest in companies that have things like, we have a co-investment with Jeff in a company called Polysync, which is a software stack for building a safety-centric operating or middleware for autonomous vehicles. But then we also have invested over the years in connected vehicle companies where you're pulling down data so that you can understand how cars communicate to each other and communicate to the world around them. We've looked at we've invested in a company called Deliv, which has got the last mile perspective, so to speak. And once you have autonomy, it will replace human drivers. So having the data about how consumers consume on-demand delivery is, I think, a big differentiator. So we think about it as pure technology and use case both. And then for us, about what sort of helps us make our decision, our specialty has always sort of been investing in companies who are selling into the tier 1s or the OEMs. We know there's a lot of companies out here that have been full stack solutions that are their own things. I'm the first to say, boy, did I miss on Tesla. Boy, did I miss on Cruise. Boy, did I miss on Nutonomy. All companies I did diligence on. But for us, our specialty is can GM, Ford, Toyota, et cetera, buy it? Because we also know at some point in time, these things have to be manufactured at scale.
Yeah, talking a little bit. So we're talking, a lot of you are talking about investing in sort of the infrastructure, the pieces, the data, the analysis. So let's assume there's a lot of VCs in the room. How would they go about finding good companies in this space? What do you do? What resources, what events, what do you read? If you're helping them look for companies in this space, how would you help them get there? How would you help them find those companies?
Trucks has two kind of secret sauce here. My partner Riley has a Future of Transportation weekly email that's read by thousands of CEOs across the nation and world. And I see a decent amount of great technology companies early on just through my patent firm. So I don't know how applicable that is to everyone else, but that's kind of our secret sauce.
For us, it's I think really there's two main sources for us. One, again, I know I don't look old, but because I'm the old man of the sector, a lot of venture funds have co-invested with us over the years in the automotive sector. So when they see something, they call us because we can bring a different perspective. And that different perspective is the second source, which is we spend a lot of time talking with the OEMs, both at the C-suite level, which is important because you're understanding what their strategy is, but also then in the middle, because it's in the middle where the decisions are made about what technology they're going to use or how they're going to invest. And in theory, when you see somebody like a Ford make an investment in Velodyne, understanding why they made the investment is as important as understanding where they invested.
Yeah, I think a couple of different places, right, which is not that unusual compared to any other venture investment. So a lot of times entrepreneurs are the first people who come to us having invested in the past companies or other venture funds. We also partner a lot with automakers as Intel. And through that network, we have known the venture arms pretty well. And so we do talk a lot about co-investments. And last but not the least is we have 100,000 employees, and I think most of them know autonomous is something we care about.
So like Mobileye, it's a small company.
Yeah, exactly.
It's a small acquisition.
Yeah, so we have a lot
Just a few employees over there.
Yeah, so we have a lot of people who are part of the outside community, and they do find some companies as well. But I think it's mostly through networking of the entrepreneurs and investors and co-travelers.
Okay, so let's switch topics a little bit. Let's talk about ride sharing. So how is this going to play out in ride sharing? And maybe the big question is, when are we going to stop owning cars? Or do you think we're going to still be buying cars in the future? How do you see this playing out?
So I think you have to first segment the market between, and the way that most of us in the industry talk about it is urban, suburban, and rural, and how people are using cars, and trying to design for all the rural uses, for example. It's going to be a long time before we see autonomous vehicles replacing pickup trucks.
The
There's a
work
high
pickup
utility.
truck.
Exactly. But in an urban environment, you can start to do things like today. Jeff has a company that's got an autonomous transport running through downtown Detroit. It's a fixed path. It knows where it's going, et cetera. It knows the route. It doesn't have to learn a lot of different maps, but in different areas of the city. But
Sort of fixed point delivery to delivery, point to point delivery.
Right, and I think that's an accurate statement. So stuff like that we're already beginning to see. So when you start to segment it like that, you can sort of see the waterfall of what will happen. We'll see autonomy hit hard in urbanization, in urban environments for very specific uses. Then we'll see it go out to the suburban environments where you don't have very challenging environments to deal with. A subdivision, you don't have to worry about, can you see around the corner? Whereas in a city, last time I checked, physics is a real bitch, and being able to shoot a laser through a building, unless you're trying to knock the building down, is really difficult. So LiDAR kind of fails in an urban environment, unless you have infrastructure in that environment picking up data and sending it back to the vehicle. So you got to break it down into those three different segments, and of course, I think there's a waterfall for each segment that we'll see over time.
Yeah, I think long term, it's going to be like a horse, right? I mean, you have one. It's not for commute, so you can call it whatever you want, but it takes a point A to B. Eventually, this market will go there, but that's a very, very long time away. In the next, I think by 2030, the estimates are that 1 in 10 cars are going to be fully autonomous, and maybe 30% of them are going to be, I would say, level 4 kind of cars. And I think the ownership level of cars is going to fall to like 20%, right? More people are not going to have cars than are going to have cars in 2030. And it's going to be a stacked event, starting with suburban, I would say slightly more urban areas to begin with. And then you have outside the US where it's much harder to get in autonomous. Like, for example, in China and India and other places, it's harder to get autonomous there. They'll start with electrification at that point.
I can't even drive there, so.
Yeah, it's hard. It's hard. Yeah.
I think to answer the other question that you were asking about, like when do we stop buying cars? I think that question is actually answered when you rephrase that slightly and you say, when we have a perfect, if you could imagine a perfect public transportation system, where on your phone you're able to just call up a bus and walk outside your door, and that bus takes you to work. And would folks give up their cars if they had a perfect public transportation system? And I think we're not that far away from that. And I think the answer is, will a decent amount of the population in urban areas give up their cars when we have that? I think the answer is yes.
So I will follow that with saying the one dirty word in the mobility space, which is but this is more than one.
Cost?
Profitable unit economics, okay? And that's the other part. My father was an entrepreneur, and he once told me something you spend a long time at and spend a lot of money on without generating a profit is a hobby. And we see a lot of really interesting companies out there that feel more like a hobby than a business yet. So the big question is, when do the unit economics make sense? That's when we'll start to see the shift in our minds. It's not just the consumer use case, because everybody would love to be able to hit the button right now, and I'm not disagreeing. That is the future. But the question is until somebody can do that in a profitable basis in a consistent way, we're still going to be seeing people buy cars.
Yeah, I think along the same lines, right? In 15 years, the cost of per unit mile for autonomous is going to be 1/10 that of actually owning a car. So I think at some point between now to next decade, you're going to see the tip-over point. And
The tipping point, right?
the
Where it
tipping
becomes
point-
cheaper to take somebody else's vehicle than actually drive it yourself.
Exactly, and it's going to start in some geographies, in some
Dense cities,
densities first.
like
before it goes-
Singapore, isn't it, where they charge a very large amount for the car? Right? Yep.
And we're already also seeing a lot of good experiments, right? I mean, everybody's read about FAIR that was funded recently down in Los Angeles, which is a new model for owning cars, and Cadillac has done their version of it, and Ford is going to launch their version of it. So just on how you own a vehicle, they're already running experiments, and these are OEMs or companies backed. FAIR was backed by BMW and has $1 billion to go buy vehicles. So these aren't small experiments to determine how the unit economics work.
I'm going to switch subjects slightly. So let's talk about how else this actually affects our economy. So insurance and how we live our lives and how we commute and how we work. Maybe pick one or two ones that you think these are going to be really big impacts as we move toward this. And not just when we get to level 5 and everything's perfect, but as we go through this transition, how are our lives going to change, or how's our insurance going to change, or how is things going to change?
Yeah, I'll take insurance, for example, right? For example, today you're insured for bad drivers, right? That's the risk you're underwriting. In the future, assuming that it goes to level 4 and level 5 in the next decade, you're underwriting risk, which is basically the risk of security not working on your car, the risk of the connectivity not working on your car, the risk of devices, and also the back-end infrastructure. So we'll start seeing insurance companies, and some of them are already thinking about it, in terms of how do we change the insurance models when cars are on the road.
Okay. That's a change, but how about bigger? How does that really influence our lives?
So just taking off of that insurance one, I think, and this was announced in California today, this is no small thing. The liability of an accident will shift from the consumer to the manufacturer of the vehicle. That is a big shift. It means that one of the values of not owning a car when you go get into an autonomous vehicle is that all of the liability for that car being in any kind of accident will be on the manufacturer of the vehicle. You think about the size of the auto insurance space and how much it impacts our life. You don't think about it until you're in an accident most of the time, but a lot of the public switches insurance every year. It's a big cost of owning a car. That is a big change for people from a cost perspective at minimum.
I mean, there's plenty of real estate that's going to change. I mean, obviously, if there's parking structures or parking spots, that's the very basic, very super easy and obvious ones. But also, almost as obvious are the things like, hey, if you're not going to be in a car that drives you for an hour and a half to work, where you have the screens to be able to do email or to watch video and recording and stream, and it feels like a first-class plane trip, and you're actually super productive on that hour and a half, then you might live in Healdsburg and commute to San Francisco. And that might not seem so ridiculous as a statement that I just made. And so we may see some folks that are actually abandoning the urban environment and living much further away. I think it's very difficult to speculate from a real estate standpoint of like, well, who's going to win and lose? But I think that there are going to be major changes there.
So, but you asked for big, and let me give you what I think is the biggest one, which is time. Right? It is true for all humanity that time is limited, and an hour and a half commute from Healdsburg actually will become a whole lot shorter than that because cars will be able to travel at a lot higher speed. There's a perspective that even with just a small percentage of level 3 cars on the road, they'll be able to better clear traffic jams, right? You've seen an accident.
They don't rubberneck.
They don't rubberneck, exactly. And they know not to tailgate and stop and tailgate and stop. They know how to zipper in, right? That's the thing that we all get angry about, is when that guy or woman on the left side is driving all the way to the end and then pulling in. But that's actually the right thing to do from a traffic flow perspective. So just having those things happen, even if you aren't in a vehicle that has autonomous features, you will end up saving time because there are more autonomous vehicles on the road. And then there's the obvious one, which is the safety, but that one we all know. But the time one for me is the single biggest change for all humans.
unproductive time to productive time.
Shorter time in the vehicle, not just productive time, but shorter time in the vehicle, no frustration because the traffic is gone, et cetera. So
It's kind of interesting. I think probably the most important one is saving lives, and we just said, let's assume that's true. It's a given, right? And that's a pretty big societal change as well.
that's like Mobileye being a small acquisition. It's not that big a deal, but it's nice.
Definitely. So, I mean, there's definitely a large potential, even during the transition as we get to level 3 and move forward. We don't have to wait all the way to 5. And you can live further away, you're more productive in the commute, and hopefully less road rage going on and other things like that, because there's other things, assuming the cellular network keeps up with it. This could be a general transition. I'm going to switch to a slightly different topic. While we were in the speaker's room, we were talking about AR. Specifically about how this could aid in the transition. So I'm gonna introduce this as the next topic, which is, okay, how does AR, now we actually, in the notes ahead of time, we talked about this AR and VR, but specifically I'm just gonna narrow it down to AR. So how does AR play into the automotive field as we move forward?
I'll take a stab at this. Imagine you're driving from South Bay to San Francisco, and your car has windows which are basically AR displays, right? And you are maybe a fan of Batman, and then you think you're a Batman and this is a Batmobile, and you're going through the Gotham City. And so that's not too far out. And actually, Intel just signed a partnership with Warner Brothers. And so this is not just mythical or sometime in the future, right? I think, like you said, this is the largest expansion of time in the history where we've had so much time, almost an hour per day. And watching media.
Sort of like when electricity introduced the light bulb, suddenly there's a lot more hours in the day.
Exactly, yeah. So 1 hour a day is a lot of time, especially for those in the Bay Area, that's probably 2 hours a day. And getting the time back for doing productive work, ideally, or watching TV, and that opens up new markets for media, for additional revenue sources for cars. So it's pretty interesting.
Marc and I were talking earlier, and one of the things that we've been looking for in terms of an investment opportunity is to actually have someone do some interesting AR work within the car during this transition point. So many of us in the room, we know how to drive, and we're not particularly confident that the car, the autonomous vehicle that we're going to step into, knows how to drive. And does the computer see this car coming out? Do they see that ped? Do they see the bicycle, the cyclist? And so being able to highlight on the windscreen that, yes, I see this, and whether that's in red or in yellow, being able to show that to the passengers, that could instill an enormous amount of faith in that vehicle, an enormous amount of trust. It's a short, probably 3-year, type of window here, but I think it's an incredibly important piece as we transition to trusting the vehicle that it knows better than you and is a better driver than you to be able to drive.
Okay. So we've got about maybe about 5 more minutes. So I'm going to ask a last question, and it goes something like this. If a new investor were to come up to you and says, I'm interested in investing in autonomous, what two pieces of advice would you give them?
I think Marc brought this up. I don't know what the word he used for companies which are investing in things which might not materialize. We call it science experiment. I think there's 2 things which people forget when looking at this space. I think one is the safety concerns. So a lot of technologies are coming out without much regard to safety. I think safety will prevail end of the day. And the second is economic viability. So if you have a LiDAR or any other component which you don't see a viable path for economic viability, we tend not to invest in those companies. So those are the 2 things which we keep on top of our radar.
I think to that end, I think one is and we're already starting to see this transition as investors in the sector. It can no longer just be like a really visionary idea that you actually have to show that you've been able to build something. And so if you're looking as an investor at a company, make sure that they can actually build what they say they're going to build. The interesting thing, and Jeff probably knows this story way better than I do, but Cruise, what it set out to be, it pivoted a couple times, and when it got acquired, it wasn't acquired for the business model it was attempting to build. So that's one, is make sure that it can be built. And the second one is from our perspective, is again, at some point in time, there's going to need to be a business model. So make sure that you understand that not everything's just going to get acquired for $1 billion by some big OEM or tier one. And at some point, if it has to become a business, you know how it's going to become a business.
Jeff?
It's related to safety, but we often look through the lens of like a trust. And can these founders build trust within society, within customers? These are big hunks of metal that are rolling down our highways at very high speeds. This isn't just software. Like these things can kill people, and they do. And they have this amazing ability to make this safer. And this is going to be an incredible time over the next decade. But do the founders instill trust? And we see that with some examples right now of transportation companies in the space that may have faltered in this in the past, of like building trust within within society.
Okay. Great. Yeah, I've got the 3-minute, but actually I think I'm just about ready to wrap up. So first, I'd like to thank you for your time. I hope you got something useful from the panel. I certainly think it's something that will change our economy quite a bit as it moves forward over the next 5 or 10 years. And I personally enjoy driving my car, but I'm going to be sorry to give that up. But nonetheless, I hope you all got something good about where to invest in the future. Thank you so much.
It's a future horse.
Maybe.